All right. Welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in the markets and how we are trading them. Today is Tuesday, October 1st. Stocks finished September strong, but the Dow plunges 300 points on Middle East fears in the Middle East, and some tensions there. Oil spikes as Iran Israel tensions escalate. Tech stocks are hammered with Apple and Tesla down 2% plus. Job openings surged unexpectedly. Is the labor market resilient to all of this? And the VIX spikes, shooting up in a huge way. We'll take a look at the VIX. Plus, I traded a new wheel strategy position today. I might share that with you. If this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading, and I'm running the show by myself today, so we could call it Coffee with Mark. Let's go ahead and look at the charts here. And I want to bring up the S&P because yesterday we actually closed at a new record high for the S&P 500. The S&P was able to finish with a 0.4% gain, and that left the S&P up higher by 0.6% for the month of September for back-to-back-to-back winning months there. And looked like we were off to a decent start for the week. And then today, opening slightly lower. Let's look at a 5-minute chart here. And we see that out of the gate, we were slightly lower and falling and continuing to fall. And right now, trading a little bit higher than session lows, but the S&P down over 1%, the Dow down 0.6%, and the NASDAQ tech stocks leading the way lower, down 1.8%. So some volatility in the market here, and we're definitely seeing some red. Let's go ahead and take a peek at the heat map here and just see where these losses are distributed. I'm going to show all stocks of the S&P 500 rather than just ones that have weekly options. And we see here that there's a lot of red. There's a little green sprinkled in. And most notably, this green comes in the energy sector. Oil and gas stocks are higher. And this is where, after U.S. markets open, there was news that an Iranian attack on Israel was imminent, and some concerns that there was preparation there for a missile attack. We'll see how that plays out. But geopolitical tensions in the Middle East definitely moving the markets today. Let's take a look at crude oil here. We can see the spike. Crude oil up 3.7% for the day, trading at 70.66 right now. But you really see it here on this spike. When this news came out right around the U.S. Open, we see that instantly the crude oil just took off, going sideways a little bit for a brief period after that spike to see what comes next. Right? Is it going to come true, or is it a little bit of an overreaction right now? We'll just have to see. But the fear index, the VIX, also telling the story here. Look at the VIX. It's actually, look at where we opened here. On a daily chart, we see that we opened right around 17. Right now we're trading at 1962, spiking up to 2073. Based on yesterday's close here, we see that that's a spike of 24%. So in a quick period of time, just the volatility expanding, exploding, and options S&P 500 premium in the options market just expanding on this news and on fear that there could be more volatility ahead. It was a little bit higher going into the session, up about 1%, and then this huge spike. So interesting to see this move. We'll see where we stand. At the end of the day, we're pulling back a little bit from the highs here on this spike, but still a big update. We see that the last time we had this type of spike was back here in at the beginning of September on Tuesday, September 3rd. So a lot of volatility in the market. Now, there were some news reports this morning, or economic reports. The news was really all about the Middle East. Let's look at the calendar here and go to the economic calendar because we had some red flag reports. And actually, let me refresh so we get the data there. We see the reading manufacturing PMI, ISM manufacturing PMI. This number here, we see that it came in at 47.2. Readings below 50 indicate contraction, and manufacturing is still a little weak here. Previous reading was 47.2, so in line with the previous reading, but the expectation or forecast was that we'd come in a little bit better at 47.6. On a positive note, though, JOLTS jobs openings better than expected, 7.71 million the previous reading, and this time coming in at 8.04 million, which was much better than the 7.64 million forecast. This week, it's all about jobs. It's all about jobs. And today we had the first jobs report actually coming in better. So maybe the job market is resilient. We talked about the Fed's fight against inflation and that 50 basis point rate cut, and how it appears as though inflation is no longer the primary concern and the job market is starting to take over. The concern whether or not rates being high for so long can hurt the economy and more specifically jobs. But so far, based on the data that we're getting this week, a strong report and better than expected. Now, tomorrow we have ADP non-farm numbers. On Thursday, we have weekly unemployment claims. And then come Friday, that's when we have the big one. And the biggest of the jobs report, the monthly job report with average hourly earnings, non-farm employment numbers, and that employment change or the employment rate. And we'll see what this one says, but a decent start jobs-wise. However, that really being overshadowed by everything else going on today, because if we look at the S&P 500 and we look at a 5-minute chart, we go back to where this report came out. I mean, really a little bit of a pause there. So the reaction, there was some indecision. There was more downside that came later in the morning there, but there wasn't a direct reaction to that manufacturing news or that jobs news. It was more of a pause and then a continued move lower. Right now, we're making session lows. The VIX is higher. Crude oil also higher. So some concerns there in the Middle East and what's going on with Iran and Israel definitely moving the market. The NASDAQ down more than 2% now, trading at session lows. The Dow down 0.8%. The S&P down 1.3%. So definitely some volatility in the market. Gold spiking a little bit, not quite getting back up to records, but thought this was notable at 0.7%. The record back here on Thursday, we'll see if there's a flight to safety here and some concerns. Right now, up for the day, but not quite getting back to those highs. Let's go ahead and jump over to PowerX Optimizer and look at the WTF analyzer, because we might get some trades tomorrow. We'll have to see. Those signals pop up after today's close. But right now, no new signals. There are 2 open signals still. We have J&J, Johnson & Johnson. This is a trade that I took. I was filled, I believe, right at 160.24. In spite of today's weakness in the overall market, still positive for today's trading session and trading at 162.28. So this one up $2 on this trade. We'll see if we have an exit at the end of the day. Right now, just following the plan and waiting for an exit there. Now, Pepsi was another one where I got into this, and on the initial entry, that entry day, a nice pop, but then pulling back, finding just like teeter-tottering around this 200-day moving average. Today, flat. No, actually, I'm sorry, up 0.4%, up almost a 0.5%. Got in right around 170.87, and right now Pepsi at 170.82. So even though the broad market is lower, Pepsi hanging in there right now, and really just flat on this trade. So WTF's working out okay, and we'll see if we have some new signals if we end lower today and there are more that pop up in the indices that we like to trade the WTF strategy on. Moving on. Let's take a look at some wheel trades. And BP, on the news from the Middle East, BP spiking. So opening flat today. Yesterday, rallying and then pulling back and ending slightly lower for the trading session. That was a little bit of a disappointment. We filled that gap and then pulled back. But today, BP up 1.8% with those concerns from the Middle East. CSIQ, interesting to see such a big pullback here. This one was looking great yesterday, got above $17 a share. And with a pullback like this, I don't want a 6% pullback, but at the same time, when we've had such a big run up, you expect that there will be pullbacks from time to time, right? From the lows that we had in September to these highs, that's a 51%. Is that right? That doesn't make sense. No, it does make sense. What am I talking about? It absolutely makes sense. 51% gain. And now, even if we look at what we gave up yesterday and then also today, still up 38% from those lows. And yeah, I don't want 6% pullbacks, but at the same time, pullbacks can be healthy, right? We have these nice ranges, and we know that there was a lot of trading around 15, and this acted as resistance at the end of the week. Last week, we saw it pop above. And just looking to see 1550 or 15 now act as support, and then a continuation of this move higher. So not what I like to see, but with the overall market down, this can definitely be expected, even if the move higher is prolonged and healthy in general. Halliburton also getting a boost on those geopolitical tensions and concerns. So Halliburton up 2.5% today. And coal's taking a hit after a nice rally yesterday, getting up to 21.28. Marcus was able to sell calls at 21.50. Put in an order for calls. I think it was at 23. I don't know for certain, but I don't believe that he was filled at 23. Down a little bit today, but also pulling back to these ranges. And this type of pullback, it's normal, right? If the stock's been trading between 18 and 20 or 20.50 for months, and then we break to the upside, pulling right back up to those highs, that's okay. Merck up a little bit. This one is a trade that I'm not in. I'm not in coals either, but Merck up a little bit and just kind of hanging out. Nice to see a positive on a down day for the overall market. Now, UPS, interesting here because there's, the port strike that has been discussed. Here we see the port strike, bargaining for a new 6-year contract between dock workers. I mean, this, if an agreement is not reached, it has the potential to impact the East and Gulf coasts on this walkout, and this would be, see, FedEx and UPS would directly benefit the most from a strike situation, which is interesting, right? And in our mastermind call today, someone said, "Well, what do you think the impact is on FedEx and UPS? Will it negatively affect FedEx and UPS?" And at the open, my comment was, well, the chart's telling us what we need to know. And so we open flat at that point in time. And if we look at what has transpired the last couple of days, we actually see that UPS has had this real nice move higher, breaking to the upside, filling this gap, starting to fill this gap. Today is a big down day, and a 2.7% is a larger drop for FedEx. However, I still believe that this is mostly attributed to the overall market and what's taking place. I mean, if we look at the heat map here and we see this red, right? Nvidia is down 3.7%, Apple's down 3.5%, Microsoft is down 2.5%. Let's go back here. And if we look at, I mean, just the UPS, FedEx is down 1.6%. Some of the other industrials are down 2% plus. So it doesn't really seem like this is tied so much to the strike issue as it is to the overall market and what's going on in the Middle East. Again, not what I would like to see, but if we're pulling back to these upper ranges, that would also be normal, right? So if we break to the upside, what was resistance could act as support on the way back. And look at where we're trading right now. We're trading right around here where we have this gap higher. We had a bit of a gap fill here, trading right where we opened up at that gap on Thursday. And chart wise, of course, not what I want to see, but that to me isn't unusual or glaring concern. So, with that said, it's all about jobs this week, but geopolitical tension spicing things up a little bit, and hopefully, I would rather crude oil spike and move higher because of OPEC cutting output than concerns in the Middle East, right? But I also believe that geopolitical issues are always, were highly probable, and could potentially drive crude oil higher. Today, that is the case. Now, crude oil trading near highs of the day up 4.25% here, getting back above $71 a barrel. The VIX up almost 20% for the day, and we'll just have to see how this plays out. So it's always more fun to tell dad jokes with Marcus, but I appreciate the comments, especially the last 2 days. I know that I spiced it up a little bit, and yes, it seems like our viewers like things a little spicy. So my molasses joke yesterday and good old Dragon Balls on Friday seem to be winners. But I'll definitely go more PGE today. PGE. That's a joke in itself. What the heck? I'll go more PG. PG today. Have you ever tried to eat a clock? It's very time consuming. Yeah. That I'm gonna bring it tomorrow with Marcus. Save the good ones for when Marcus is there, because a little friendly competition never hurt nobody. All right. With that said, I hope you're having a great trading day. Hope you're having a good week, and we're going to be back here tomorrow. Marcus will be joining me. Until tomorrow, though, happy trading, everybody.